Hey, everybody. Welcome to the morning market briefing. It's Wednesday, May 27th. Almost said April. May 27th, 2026. Hope you're doing well. Let's jump right in. AI stocks, man. If you got something AI related, welcome to the $1 trillion world. I mean, just the number of companies impacted by the AI boom that have created value. I'm not going to say out of nothing, but seemingly out of nowhere relative to performance history, not just for these companies, but the market as a whole. Is pretty staggering, Ben.
Yeah, maybe we can share this and just go really quickly and kind of discuss the ones that people haven't heard. And this is very interesting because a lot of times we just talk about the S&P 500 names or the U.S. names, but there are other names that are also over $1 trillion in the world, and they are also tied to AI. So you got NVIDIA, obviously, leading the pack. Everyone knows what that is. Alphabet, parent company of Google. Apple. I do think that Apple could become a leader in AI edge technology. So the more devices that are using material from the surroundings or analyzing things at the edge on the device, I mean, Apple is the leader there.
There's a device.
Whether it's AirPods or phones.
Speaking of edges of devices, have you seen the rumors that the new AirPods are going to have cameras on them?
Yes.
What happens if your AirPod is in slightly cockeyed? Like, is it going to be? I mean, like, I feel like the visual field would be weird because it's going to be so much further apart than your eyes.
Yeah.
Man, like, you know what I mean?
I'm kind of in on that. Though.
Yeah, like what happens if you're taking a video and one of your AirPods falls out?
Oh, it happens a lot.
Everyone would immediately get sick, I think.
Yeah.
That's gonna be awesome.
Yeah,
because one stays, and it's like, whoa.
Yeah. So, speaking of
like,
the edges,
did he fall or not?
Yeah, it's gonna be like fisheye, like a.
I can't wait.
It's gonna be so strange.
Like a hammerhead.
My morning strolls to the cemetery are gonna be electric video footage. We're gonna broadcast them live on this channel.
Do you high five the statue of the lady in the bonnet?
Yeah. Got to.
That's all. Yeah, it used to be my 5K run. I would high five the statue of the ladies at the edge of the cemetery.
Yeah, if I get right to that point and go back, it's 2.5 miles. I go a little further, no big deal. Try to get to the full 3.
Yeah, but from here to there and back to the office is exactly.
Yeah, from
5K.
here. Yeah,
and it's relatively flat for the surrounding area.
Yeah.
Which is
it's difficult to do
considering there's a mountain.
I'm now just walking, not running, but I spent a lot of time when I was on the running journey of 2024 really engineering flat routes.
Yeah, it's so hard to do right here.
Then we got Microsoft, Amazon.
Good digression.
Microsoft, Amazon, Broadcom, which sells a lot of AI chips. I think people might be surprised to see that that's a $2 trillion company. Taiwan Semiconductor, the first non-U.S. company there at 1.9. You do have Saudi Aramco going in at 1.8 trillion. I think it came public at about 1.8 trillion about 7 years ago. So not a whole lot changing there. Tesla, obviously Meta, Samsung. Samsung, people think of the TVs, but really it's a memory chip company. SK Hynix, a memory chip company. They compete with Micron and Samsung. Berkshire Hathaway slips in there. Then you got Micron. And then Eli Lilly just became a $1 trillion company on the backs of some of those announcements that we talked about yesterday. Walmart, next $1 trillion in sight. So, but I mean, you look at all of those and it's AI.
Hey, Ben, how many of those companies are headquartered in the European Union?
Yeah,
that's what I thought. That's what I thought.
Quick shout out to the haters.
Yeah, quick. Yeah.
Meanwhile,
notably, you have two South Korean and one Saudi Arabian company.
And a Taiwanese.
Yeah, Taiwanese. TSMC. But also, like, underrated, not present there are basically 3 companies that are about to IPO that are all going to be in and around as big or bigger than all of the non-U.S. companies, but they're all U.S. based. So
Anthropic, they're saying, is closing in on a $2 trillion valuation as well as SpaceX.
Yeah.
Yep.
I mean, it's pretty crazy. I mean, especially these memory chips. I mean, the SK Hynix thing, the Micron. I mean, it's like these companies are suddenly just like deep in the booger sugar. They're up every day, all day, cranking out
Micron
power.
was up 20% yesterday.
Yeah. I mean, it's nuts because by the end of today, it's very likely that Samsung will be the second largest company in South Korea, which if you had asked me 5 years ago, will there ever be another bigger company? I mean, they employ like 80% of the country. I mean, it's the biggest employer by a mile in South Korea, and now it's going to be the second biggest company. assuming the performance of SK Hynix is similar to what it was the last 3 days. It's pretty nuts. But to your Anthropic point, I talked about it on the call on Friday. There was an article in Bloomberg that said that what they were calling the Anthropic basket was up 56% month to date. And that was on Friday, and I imagine it's closer to 70% today.
Yeah. It's wild. What a ride.
Yeah, but that includes SK Hynix. That includes Micron. It includes a lot of those memory companies.
Yeah, and a lot of clients might ask us, why don't we own these memory companies like a Micron or something like that? And, 8 quarters ago, this company was losing money.
Yep.
And it had been losing money for 2 years. This is one of the most cyclical companies in the world. When you do...
And it has been my whole career.
Yes. I remember doing a capstone class in college in 2011, and we were looking at DRAM. It was a DRAM company, and the idea was you got to manage a business through the cycle because this is the most cyclical, most commoditized business that there is. It's memory chips. And the thing about it is you can build more capacity, and they will build more capacity, and that capacity will come along and pricing will go down, which, by the way, is the main reason the revenue's up. This is the primary determining factor, and is just price. It's not necessarily even volume right now, but people want high bandwidth memory, and they're spending fortune on all these AI chips. So they're like, what's another 20% on a memory commodity cost?
So the lead semiconductor analyst for Van Eck, which is a super niche investment firm. They have famously they debuted Buzz, B-U-Z-Z ETF, which was a Twitter-driven ETF backed by Dave Portnoy, and the idea was that they would weight
what's getting social buzz.
Yeah, with the social buzz, which I'm assuming now has a huge Micron component to it, but super smart guy. I had breakfast with him last year.
Too.
Angus Shillington, great name, but he's pretty active on Twitter, and I'll let you translate exactly what this means, but one of his most recent tweets is, less than 25% of Micron revenue is HBM. This matters. Apple is approving CXMT as its memory supplier. This matters. Almost 100% of Micron gross margin bridge from 2024 to 2026 is price. This matters. I'm done with the memory trade because there's a trap door. It's Chinese memory. This matters.
CXMT coming public here, is it if not today, then in the next week, which is the big Chinese memory company. I'm curious if that breaks the $1 trillion valuation.
Yeah, so he's basically saying
watch out.
Yeah, they've just raised the price to the point where now they're insanely profitable, and when this demand starts to die down, they're going to be not profitable again, and that CXMT is going to undercut them like crazy.
Well, that's the definition of a commodity. It's same like with the airlines. As soon as the airlines make gobs and gobs of money, you just come out with another airline.
Yeah.
And same thing with memory chips. If you make gobs and gobs of money in these memory chips, just we should all just start a memory fabrication.
You know, it used to be a really expensive memory
I've been
chip?
making memories.
CD-ROM. You know, it used to be like 5 of them cost $20, and then it was like you get the big
tower
spindle.
Yeah,
the spindle of them, for $20. And then you had 1,000 of them, and then you never used them again, and they sat on your desk for 5 years, and you threw them away.
But Blu-ray.
Yeah. That's a memory chip, and they were expensive to make at first until they weren't.
Yeah.
And there was high demand for them until there wasn't.
Yeah, and then there was none.
Yeah, and so that's something to consider. Memorex.
Hicks, did you ever burn a CD
or rip it?
Yeah, you ever rip a CD onto your iTunes?
Man,
put it on your MP3 player.
Hit up LimeWire.
Ooh.
Get all kinds of corrupted files and viruses and other things that we won't talk about.
Kazaa.
Yeah, man.
What do you know about Donald Duck?
Yeah.
That's a famous LimeWire.
Yeah. Google it later.
Yeah.
So we've got these companies just absolutely ripping. Meanwhile, I don't know, is this company pronounced Zscaler or Zscaler?
I don't know, but it's a sleepy company right now, down 20% pre-market. They actually reiterated guidance. They're a cybersecurity company. They compete with the likes of Palo Alto Networks and Fortinet and a lot of those other cybersecurity plays, but they're down 20% pre-market despite reiterating guidance for the year. 2 of their top salespeople left, and they're saying, we're going to be prudent or cautious about guidance going forward. it's not a good sign of their business. If salespeople in software make money, like the lion's share of the money on the commission. And so if they've got a good thing going, they're not going to jump off that gravy train. And so I think that people are really reading into this as they don't have a good thing going. I still think that cybersecurity is going to be more important with the proliferation of AI, especially the more that AI is being used at edge devices, whether on Tom's PC or Hicks's phone right now. So we'll see what happens with this, but I still think that cybersecurity will be needed, and I think that a lot of these companies will actually end up doing well. But for now, if you're in software, whatever you're doing in software, including cybersecurity, you're getting trounced.
Zscaler, 8,700 employees, 40% working in sales and support, speaks to the robustness of the business as well. If you say, well, we lost 2 guys, so not real comfortable saying what's going on here. Tom, let's talk fixed income a little bit. There's a quote here. I don't know if this is attributed to you or if Ben's just telling you to talk about it.
So yeah, Ben and I we've continued.
I hope this is a Tom Russell quote because I like it.
We continue to try and come up with ways to explain why the opportunity is so good in bonds right now. And Ben actually came up with this one yesterday in the kitchen, which is the strategic income reserve, which I actually think is a pretty great way to think about what's going on in bonds right now, which is that, we've talked a lot about the strategic petroleum reserve on this podcast, that basically we emptied it at a bad time. We never refilled it when we should have. And now we're up against a global shortage, or at least a squeeze on demand. And we don't have as much oil in the strategic petroleum reserve as we probably should, particularly at a time of war with a country that produces oil. And I think we need to think about that when it comes to the bond portfolio now, which is that we're not seeing a lot of gains in bonds. Bonds are flat right now, but you could argue that the volatility right now is just as high as it was in 2022, but the starting point is so much higher that we're virtually inoculated from downside. And so, when rates go from 1 to 5, you see, 15% losses on bonds, but when they go from 4 to 5, you're basically flat. And so that's a great spot to be in because the bond part of our portfolio is flat, maybe up a little bit after yesterday's big rally, but stocks are up, 10, 11% for the most part. And so what we can do is start to use this opportunity to build a reserve, which is to say we want to have 5% returns for as long as possible. And we've talked a lot about the 30-year treasury. I think that's the lowest hanging fruit. And maybe we over-index that when we talk about it, where man, we've got to hit that. We've got to get it. There's so much upside there. But as a percentage of the overall portfolio, it's actually pretty small. Most clients, their duration on their portfolio is somewhere between 5 and 6. We're working to get that closer to 7, which is about in line with the index. We've been notoriously short through the hike cycle. But, basically the idea is, you're buying short-term, maybe more credity bonds like H.B. Fuller, which makes components that go into toilet paper, in the 6% range. We're buying taxable munis in the 10-year range that are yielding 5. We're buying things like Hyatt Hotels or Heiko, which are bonds that are in 31, 33 that are yielding over 5%. We're buying mortgages that are, 7 to 10-year tenors that are yielding 4 to 5%. We're buying all these different things. So almost every single bond we buy is going to be somewhere between 5 and 6% yield. And we're going to own them from now to 5 years to 10 years to 15 years to 30 years so that when it comes time where there's a pullback, and there certainly may be. I mean, if the bottom drops out of this memory trade, we're going to see a lot of the gains in the S&P 500 and the Nasdaq especially evaporate overnight. And we want to be in a position where, 40% of the portfolio for most clients is probably going to be up, and it's going to be up quite a bit. And even if it isn't, it's going to be generating a 5% income return as far as the eye can see. And so we're building that reserve, just continuing to build it and build it and build it and build it, because that will roll off, over a 10-year period. And if we can basically set a floor on one half of the portfolio, or 30, 40% for most clients, then you're going to see performance be very good and be able to opportunistically sell in those positions when we do see a COVID-like scenario or a Liberation Day type scenario, which we didn't really have those opportunities before, when rates were so low because it wasn't generating enough income or enough potential upside, to flow that money back the other direction.
Yep.
And so, we just gotta top off the strategic income reserve.
It's a classic case of adding when you can, not when you have to.
Yeah.
I mean, for the longest time, the first half of my career was in a world where rates were 1 or 2%, and people were saying, "I got to get income. I got to get income somewhere. Could I go in these dividend stocks that yield 2.25% just to get income?" You have to get income in that scenario. That's not a good time necessarily to be forced to buy bonds. Now
You can get it.
Yep. And so do it when you can. Refill that refill that reserve when you can, not when you have to.
And if you look back at kind of the post-global financial pre-COVID scenario, when bonds were selling off, oftentimes stocks were selling off because bonds were selling off. And you're not seeing that correlation anymore. Because you think of like Fukushima or the debt downgrade in 2011 or the taper tantrum in 2013, we're like, oh man, 10 years gone to 3%, stocks are dead, and so you couldn't sell stocks to buy bonds at high levels, and you couldn't sell bonds to buy stocks at those levels either. And now we're in a position where it's like
All-time highs.
yeah, we're seeing all-time highs. We're seeing bonds basically at all-time lows. That's a great opportunity to just, buy low, sell high, and sell high and buy low simultaneously, on both halves of the portfolio. And so it's just an unbelievable opportunity, particularly for those people who are retired or near retirement, or sitting on a lot of cash. I mean, it's just unbelievable opportunity.
Even for younger people, though, I think there's some opportunities specifically in finding something with a low coupon or even a zero and just saying, hey, I'm going to hold this in as a percentage of my portfolio. It's actually going to grow over time, and I'm just going to pick this up even if you're not close to retirement. I don't think it's a bad option there.
Yeah, I mean, you could buy a $10,000 tax-free zero muni that's a 30-year bond, probably yielding close to, I'd say probably at this level, 4.5% tax-free to you, but your total capital outlay is going to be 25, 30 cents on the dollar. So you can buy $1,000 of exposure for $300, and by the time you retire, you will have annualized basically an 8% return if you're in a high tax bracket, because you're getting, 40% off the top, 25% off the top, plus that income. I mean, and your total capital outlay is extremely low.
Yep.
I mean, there's a number of different ways to attack this, depending on what your goals are.
Yeah, if you want $1 million when you retire and you have $250,000, well, we've got the product for you.
Yeah, you can put it all into a handful of zeros, and it's just going to grow, and you're not going to pay taxes on that along the way.
Ben, we do have reports of a MOU, Memorandum of Understanding, for a peace deal in Iran. According to Iranian state TV, U.S. military forces would withdraw from the vicinity of Iran and lift the naval blockade. Iran commits to restoring transit through the strait back to the levels they were before the war. They have to do that within a month. Traffic through the strait will be handled by Iran and Oman. Any other details you know of? And do you view this as promising?
I view this as promising because this is the first that we've really heard from Iran itself, and it aligns with what we've heard from reports from U.S. media as well. So I do think that they're close to an agreement, and I think that this is good news. And if traffic can be restored in a month, where we're seeing some impact on oil, and oil's now very much into the 80s.
88.52 at the moment.
And 10 years down to 4.46, I think I was seeing. So we're moving in the right direction. Like we said yesterday, there's still a lot more that can come here. I do think that turning the oil back on and getting that out will take some time. At the same time, one speculation that I have is that with all this oil that's been stranded in the strait that's already loaded,
It's got to go somewhere.
Will it all hit the market at the same time?
Yeah, because it could crater the price.
Yes. And so I'm very curious. I would expect a lot more oil volatility over the next, even as we're opening, and you'll see it go down and then it'll spike back up because then the ships have to go back and pick up more oil. And I think that you could see these weird gyrations that cause people to think, oh no, oil's going back up. Now oil's, and really freak people out. But I think that that's just a hypothesis that I'm working with. I think we could see that, but overall, this is good news if we do move forward on this.
Good stuff.
So inflation 1%. Is that what you're saying?
You heard it here first. All right, we'll wrap it up there. We will be back tomorrow. Y'all have a great day. Talk to you soon.